What is up everybody, Gifford here and welcome back to another video. Good to see you, and today I want to talk about that Tesla is crashing but why I'm still invested in it. So the agenda of today's video is an in-depth look into Tesla stock and what I think its true value is. We'll have a look at the stock chart, also is it overvalued or undervalued, and why I hold. I'm also going to address with facts that the car demand is not declining. Let's now have a look at the stock chart, and also the stock chart is not an indication of how the underlying company is performing. So year to date, Tesla is currently down by 57.2%, so that's a massive drop from its all-time highs. We can see here it had highs of 400, or here the 52-week high was 402.67, and also now the 52-week low is 166.18. And that is a massive drop. And if we look at the 5-year, we can actually see that it is actually a 2-year low as well, where it had significant rises up. And the worrying thing is that we may actually get down to these levels here, which everyone is predicting. They're around about the $140 level. So is the stock overvalued and undervalued? And a couple of ways that some people determine this with any company is they use a DCF, which is a discounted cash flow model, and many other models also. But for me, I compare it to the index PE versus the Tesla PE. So currently, if we have a look at Tesla's index PE, which is, it's in the NASDAQ, so it would be the NASDAQ 100, is currently at 24.5, and the Tesla PE is at 53. So overall, what this means is because it's pretty much double, therefore Tesla is considered overvalued, and I agree with this. So why am I investing in Tesla? Because I think they're actually going to grow. So I don't mind paying a premium to buy the Tesla stock price now, because I think its revenue and EPS is going to grow over a long term, and there's no guarantee that it can go lower. Obviously right now it can, because things are looking pretty bad. But Tesla stock is pretty crazy, and it can run up pretty quickly when the right economic environment happens. So we're going to go have a look at Simply Wall Street, so I can show you a bit of what I'm talking about, the revenue growth in its car sales. Also, we're going to have a look at an Excel sheet projection, which I have, which makes sure that I am actually tracking the amount of sales and car deliveries that they do. After that, we'll go into some forecasting of stock analysis just to verify what I'm actually seeing is correct. So over at Simply Wall Street, we can just see some of the rewards. Let's have a quick read of it here. It's trading 1% below its estimated value. Well, we think it's overvalued, so that's fine. Its earnings are forecasted to grow 22% per year, and its earnings grew by 222% over the past year. Although some issues or risks are significant inside selling over the past 3 months. This has been Elon Musk and the whole Twitter deal. Also, some people have been selling because of the macro environment and us heading into a recession. So the people that have been here before know that it's going to get worse. Also, shareholders have been diluted in the past year. So the most important thing when still investing in this company that I think is overvalued is its future growth. And we can see here it's got 6 out of 6 scores of future growth. So they reckon it's going to grow by 22%. Here the blue line is their revenue and the green line is their earnings. So revenue is the top line of how much they're actually making as a company. But what really matters is its earnings. How much money does it keep after it's made that money? So we would take this example for a person. They may get a salary or a wage, but actually how much do they save a week is what really matters, because how much they save is how much they're going to keep, and that ultimately is how they're measured by their wealth. So we can see here the revenue of September the 30th, if we take it by this number, is $74 billion, and of that they get to keep $11 billion. And if we fast forward that to December 31st, 2024, we can see here that the revenue is 147 billion, pretty much doubling, and same with their earnings as well, doubling to $23 billion, which means that while the share price is down right now at a PE of 53, remember people were buying this at PE over 100, we can see here that they're comfortably going to make that money, which eventually should result in the stock price going up. And during the time of economic hardship, we can see here that Tesla's financial health is 100% very good. So we can see that the only debt they have is about $2.3 billion, and their total equity and how much assets they have is $41 billion. So they have a lot of cash. And going into this, you can just see that they're going to be making heaps more revenue, heaps more earnings, and they have little debt. So therefore, these high interest rates is not going to really cost them a lot. So going over to my Excel, which I just noted down its revenue, we can see here that I've got back from 2016, and this is in the millions. So that's $7 billion in revenue. That's 11, and we can see here the difference in percentage. So they've gone up really 68, 83, 15%, 28%, which is pretty low, and then quite a lot to 71%. What I've done is just averaged that out and had a look at it and gone, okay, what is the middle, which is about 46%, and we can see in 2022, by the time of this year, they're going to be making $78 billion worth of revenue, which is pretty much what we saw over there. I've then gone, okay, if they grow only 30% and then 30% a year again, we can see that they're making their way up, so $102 billion, and then the next year after that is $132 billion. So I've only got 30% every year increase, so they're going to be still making a lot of money. It's not like they are declining, so there's nothing to worry about. Although the share price has been going down, the actual company has been doing very well. So down here is the quarterly revenue, and basically we can see that there is some negatives, but over the time that the trending line is that they are making money, more money every quarter, which is good to see. And just a quick note, you can see here that usually the last quarter that they do sell cars is more than all the other quarters, so that's a good sign for us going into Q4 for Tesla. So we're over at Stock Analyst, and this is a really good website that I like to track. Let's have a look here. I'm not going to worry about the projections because who cares about that. So what I'm looking for is their revenue estimations and comparing it to my ones. My ones I've sort of lowered a bit because, let's not get ahead of ourselves. We are going into a recession, or in New Zealand, I think it's already a recession. So here's the revenue here, 11 billion there, and then we're up to this year. So 2021, there was 53 billion. We think this year they're going to do about, mid 70s. Here they've got 85 billion. And then again, let's have a look at that number that we said before, 145, I think, to 150. They think they're going to do 151. So even the analysts think that their revenue growth is just going to keep growing bigger. And if you look 4 years ahead, we can see that analysts have gone really bullish, and they've gone to $210 billion. That is pretty much 3 times they're doing now in only 4 years' time, which is pretty crazy. I think that's a little bit too far-fetched, but who knows? This is Tesla, and this is why I'm invested, for rapid growth. So obviously the key driver is car deliveries and their car sales. If that was to plummet, then obviously none of this works out, and the stock price is absolutely going to tank because we know that it's overvalued and people are paying for the growth, like myself. So here's a typical headline here that you find in news articles, that the car demand is going to slow down, or even worse, it's going to decline and no one's going to start buying Tesla cars because they're too expensive. Bear in mind that Tesla has many products to come. They've got the semi-truck, the Cybertruck coming, and also the little car, which is going to be half the price of all the other ones, along with their Model Ys that they're still selling and their Model 3. So a massive product line coming up. They've got their existing products, which are already good, and I myself would love to buy a Model Y if I could afford one, or even a Cybertruck. So increasing car delivery is what I'm looking for, and also the total cars delivered. Let's have a look at another website that proves some of these facts. And over here in this website, cleantechnica.com, we can see the breakdown of the quarterly deliveries of Tesla. Over the years, let's just say over the last 4 years, also during a pandemic, the demand has not slowed down. We can see that a total chunk of these has been the Model 3 and now the Model Y. And then eventually they're going to bring a compact car to bring to the masses that people like me might be able to afford one day. So demand is not an issue. We're going to see it in these graphs if it starts to fall off. And there's going to be other automakers that make EVs, but ultimately these cars are replacing internal combustion engines, ICE cars, and they're only going to get cheaper over time as the technology improves. This graph here shows the demand is not a problem. And even if demand was to slow down, even if they still make these amount of cars, they're still going to be making money. People are freaking out that, no one's going to buy this, Tesla's going to crash, and no one's going to buy their cars. But even if they continue to make the same amount of cars, car capacity they have now, and sell those cars, they're still going to make money. The company is not going to be in financial issues. And just very quickly, there's 2 graphs here, and we can see the Model Y just absolutely take off in sales because I think it's a superior car. I myself have looked at a Model Y in real life, and man, that car is just so much better functionality wise for families compared to something like the Model 3. Obviously the Model X and S isn't relevant because it is very expensive. It's a luxury car and it costs a lot of money. So yeah, these two offerings are very good, but I'm very excited for the compact car, which is, they're going to end up selling a lot of those if the price point is correct. And we can see here Tesla's cumulative delivery. So overall, how many cars have they delivered? And look at that. It's just going up and up and up. And if they continue this trend, there's a lot of money to be made in this stock. And another big moat that they have is they actually make a lot of money from the cars they sell per car compared to other automakers. So reading here, Tesla reported 3.29 billion in net profit last quarter compared to Toyota earnings of 434 billion yen. That's despite Toyota delivering almost 8 times more cars than Tesla during the same time, which means that per car Tesla is making more money compared to Toyota and also other manufacturers, because Toyota has been around and they've perfected their car making, although this is totally different technology. So at the bottom here, we can see that car sales will equal revenue, which means more EPS, which then eventually will push up the share price. So to conclude the video, I am a bag holder because I have 100 shares with a cost basis of $260, which means I paid $26,000 for that, and the stock price now is hovering at about $160, which means that I am down quite a big amount of money in my investing portfolio. But as you can see here, I'm happy to hold. I am going to keep continuing to buy and average myself down when I can get money, and over the long term all I've got to do is hold because the company is doing well, and hopefully over time we do get some good news to see those revenues and car deliveries increasing, and eventually the stock price is going to be over my price. I can't at the moment sell options in these because it's far too low, and I'll only get like $5 or $10 even if I do options for 3 months out. So I'm just going to wait and hold this bear market out. Who knows how long it can last, but the company wise and my shares are in good hands. While it is depressing, I can't really do much apart from try to get some extra money to keep buying down. Well, that's enough for me today. Thank you very much for watching. Please hit that like button to support the channel and subscribe if you're interested in this kind of content. Also, you can go over to Instagram and follow me there, as I do posts every other day while I'm not on here. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Thank you for watching. May the gains be with you. I'll see you in the next one. Goodbye.